One of the stocks that's doing really well lately is Rivian. Shares are up 52% just over the past month. Has been on a hot streak since the election. A lot of that is based on speculation that the economy is going to get better. People are going to be buying more expensive vehicles, more expensive electric vehicles. But over the past week, there's been a lot of discussion about the Trump administration actually getting rid of the $7,500 tax credit. If that happens, I think there's going to be a huge flood away from electric vehicles, because that's been one of the biggest draws over the past couple of years. And on top of that, Rivian has billions of dollars on the line in loans from the government that could also be pulled back as well. So I want to go through exactly what investors should be watching, why I think this is a much, much riskier company than a lot of investors and the market think it is today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/A, I'll give you their top 10 stocks to buy right now. So let's look at the momentum in the stock first. And you can see here that shares are absolutely on fire, up 52%. Like I said, over the past 6 months, shares are up 40%. Obviously very, very volatile over that period of time. Still down 35% for the past year, but much better than things looked like in, say, April when shares were at $8 per share. So why is the $7,500 tax credit so important? And this is just a couple of pieces of news over the past few days or so. There's apparently more movement in the Trump administration to get rid of the $7,500 tax credit. They do have both houses of Congress, so this is something that could be put into effect, especially since it's a tax saver. If they're going to push anything through via reconciliation, this would actually help that happen. And obviously, Elon Musk is involved in the transition. His view has been that the $7,500 tax shouldn't exist at all. But we've seen in the EV market that the $7,500 tax credit isn't something that's just a bonus for buyers. It's actually a consideration in the price that they're going to pay for vehicles. And Rivian isn't doing particularly well, even with the tax credit in place. Going to deliver about 50,000 vehicles this year, on track for positive gross profit for the fourth quarter of 2024. Now that includes about $300 million in expected regulatory credits. So take that number with a little bit of a grain of salt. They're still losing money on every single vehicle, but they may make up for that by basically backloading all of their regulatory credits to the fourth quarter. But what they are going to do is they're going to lose $7,500 more dollars times each vehicle that was actually delivered. So that would be about $375 million less in potential revenue if you just take 50,000 times $7,500. This also isn't just about the tax credit. There's a $6.6 billion loan that the company got to restart their Georgia facility. Now, there's a lot of questions around this loan. Are they going to be able to complete it before the Trump administration begins? What does this loan look like being they pause production? The plan was to basically scale back that production to about half the size of what it was normally going to be, build the R2 and the R3 there. But that would still be a few years out. So a lot of questions around, is this $6.6 billion actually going to make its way to Rivian? But if you just look at these margin numbers, this is the production and delivery on the top here. Obviously, these numbers are going to increase in the fourth quarter and then into 2025 when they work out some of their production issues that they had in the middle of the year in 2024. But revenue, just $874 million, gross margin negative 45%. That is an absolutely terrible number and doesn't get Rivian anywhere near being able to be competitive. Operating expenses, $777 million. So they're on a run rate of around $3 billion per year. That may change a little bit as the Volkswagen joint venture moves forward. Maybe some of that operating expenses is able to be pushed to that joint venture, but still operating expenses need to be covered by your gross profit, and they're nowhere near doing that. And that's going to get even harder, to the tune of $7,500 per vehicle if the $7,500 tax credit goes away. So again, the way that you have to think about it is when a customer is going to look at a vehicle, they're going to look at, let's say, a Chevy Tahoe versus a Rivian R1 vehicle. Tahoe is much bigger, so it's not a direct comparison, but that's a comparison I'm going to use for today. If a Tahoe is $70,000 and an R1 is $70,000, but gets that $7,500 tax credit, then that is a much more compelling price point. If it's the exact same price and there's no benefit from a tax credit perspective, now you're going to be weighing, do I want an ICE vehicle? Do I want an electric vehicle? What are my size requirements? There's going to be more price pressure on Rivian. And we know this because of what happened to Tesla. It was in 2023 that the company had to start discounting their vehicles because the tax credit was supposed to go away. Now, it was extended, but even after that, they had to lower their vehicles because they had more supply than they had demand. And this is fundamentally the challenge for Rivian, is can you actually improve this number to a positive number when you get to making 100,000, 200,000, 300,000 vehicles? That is a outstanding question for Rivian. They're not going to have capacity to get to positive free cash flow with just the normal Illinois facility. I don't think that's really a question right now. And it would make it even harder if the $7,500 tax credit doesn't exist. So a lot of huge challenges for Rivian going into 2025. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. There are other potential headwinds as well. Are the regulatory credits going to go away or basically be overturned by the administration? Is the charging infrastructure, which was going to be heavily subsidized by the federal government, is that going to be pulled back? Charging infrastructure is at least something to consider when you're buying an electric vehicle. Basically, some of the tailwinds behind the EV industry may essentially evaporate as soon as late January. And I wouldn't be surprised if the administration moves really quickly, because these are things where the government can save money. The deficit can be reduced if you reduce some of these subsidies that are going to companies like Rivian. And that seems like something that's going to be on the agenda. It doesn't hurt that on a comparable basis, this helps Tesla, because Tesla is a much more established company, has a lower cost structure, has much more scale in its business. But I think that's actually really terrible for Rivian, and that's why it makes the stock's bounce of over 50% over just the past month so interesting. Obviously, investors are betting on much more speculative investments today than they were just a couple of months ago. But I think from a fundamental perspective, from actually making money, making a gross profit, turning into a free cash flow positive business, the headwinds are much stronger today than they were as recently as October. And that is something that I think investors who are looking at their fundamentals really need to consider, because the future for Rivian just doesn't look all that bright if the industry is not being pushed towards electric vehicles as fast as it was just a few months ago. And we've seen a lot of companies pull back on their EV production. That's not because there's tons of demand for EVs. That's because there wasn't enough demand for EVs. That is something that investors should think about with Rivian. If there's not enough demand and you don't have some of these tax credits, some of these regulatory credits, that's going to be a massive headwind for Rivian's profitability in the future. But let me know what you think about Rivian in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.